trend and trend lines. Any one of you can define what is a trend?
Trend is something which goes in one direction.
In some direction, right?
Yeah, either sideways, upward or downward.
Yeah. So trend is an overall direction of the market or an asset price, the price of any stock. In technical analysis, trends are identified by trend lines and price actions. So there are three types of trends basically. That is upward trends, there are downward trends, and there are sideways trends. These are the three types of trends that we see in the market or any stock. Now, trends can be major trend, which are over years that are built up. Trends can be medium trends, which are over a couple of months or weeks. And then your minor trends, which are these are waves which we see in between. So while a trend can be a major trend, which is trending over years, can have medium term negative trends or minor waves coming in between. So there can be everything in a particular market or a stock in all these things considered. So if a trend is long term is going good, one can ride the whole rally and play with the medium terms and the minor trends in between, or just hold on to the trend as long as the trend continues. Now, identification of the trends are clearly by the trend lines. Now, what is a trend line is basically when you join two highs or two lows of two candles or more, and you extend that line, it is nothing but that is a trend line. Now, trend line can be two types. One is horizontal and one is slanting, sloping, right? So when you join two highs or two lows or two consecutive highs or lows to form a particular pattern in a particular stock or a market is what a trend line, defines a trend. And trend lines usually act as support and resistances. The more number of points that get joined, the stronger is the support or stronger is the resistance. And lastly, past support and resistance. So something that was a resistance in the past becomes support going forward once the price has been crossed. Likewise, if there's something that is support, once a price goes below that, it becomes a resistance for the same going forward. That is called nothing but change in polarity. Now we'll just see each of them individually. So trend lines again are of two types, that is static and dynamic. So static trend line is nothing but a horizontal line where the price is predefined, that is that one particular price, and that price will never change. Like in case of Nifty, 18,887 was a horizontal line, which is a static trend line, a static horizontal line. Now that was a resistance until it broke out, and now that has become a support. So going forward forever, 18,887 is going to be a support line as long as the price is above that. Sorry. And when the price comes below that, the same line is going to become a resistance for it. But with the passage of time, that line is not going to change. The value of that line is not going to change. On the other hand, you have a dynamic trend line, which is the sloping lines. Now, the value of that trend line will change with the passage of time as the price moves. Okay, so we'll see that also how. Now, this is a static trend line in Canara Bank, where you see there were multiple resistances on it. 1, 2, 3. Then it broke out from here. Then they hover around on it multiple times. Here it took support again. So when you connect multiple highs of the same, price are the same candle on the candle's highs or lows. In this case, it is highs. It has become a trend line. This is a static trend line, a horizontal trend line, which is acting as resistances here and supports over here. A dynamic trend line. When I say a dynamic trend line, the price will change as per time. Over here, let's say the resistance was around 240. With the passage of time, when the price was going down, if the price had to move somewhere here, it would the resistance would not be 240, it would be around 220. So in a dynamic trend line, the value of the resistance or the support changes with the passage of time. Now, this is a major trend. This is nothing but the chart of Nifty from 1991 onwards till 2005. So it was in a channel, right? So this is a major trend. Now, in between, there were minor medium-term trends which are down. Okay, then there would be probably days or weeks which are again swinging up in between. Like these would have been some, or this would have been a, a very a short upside swing in between. But overall, the trend has been positive. It is a major trend over the years. So when you connect these highs and you extend the line, this line goes on to become the resistance for the price in future. Likewise, the support line, which is the bottom line, when you connect two points and extend the line, that becomes a support for it going forward. Now, in this case, when these two lines were connected, the third time it took support over here and it reversed from here. So when you have trend lines drawn on your chart with clear identifications, you know where the price is headed and you know where the resistance is or where the support is, and you can act accordingly. If it is somewhere in between, you know, okay, it is still trending, but the medium term trends may be sideways or maybe down or up. But as long as it is in that range, you know that the longer term trend is safe. Now I'll just give a couple of examples of static trend lines. This is MRPL. When you connect majority of the supports over here, they became resistances over here. It broke out, it rallied. There's another resistance in MRPL itself. After it broke out here, it hovered over here. There were multiple resistance lines. Now we knew it's going to take time to cross the levels of 80. We always told you once 80, 82 levels are crossed, it is going to rally up. So one of the reasons why we gave this figure was there were multiple resistances over here of the past, which are acting as resistances now. So even before this happened, we knew that this level over here, this range is going to be tough for it to crack. Now you have AB Capital. AB Capital in 21 March made a high over here, retraced, tried to break out of it. It did not. We joined these two highs and extended the line. So we knew this was going to be a resistance line. It fell from here, it moved up, it broke out, and it rallied. Now this level is going to become a support for AB Capital going forward. But as simple as this, we knew this resistance line was going to be tough to crack. It cracked, and we could take positions here comfortably. Your risk reward ratio here was very apt because you built up a position at around between 140 and 143, 144 with a minimum downside, because you know if it closes below the support line, you have to trigger your stop loss. And the upside is going to be substantial over there. Now this is Axis Bank. Same, you extend multiple highs. 1, 2, 3. This is the fourth time it hovered here. It broke out and moved up. The same line acted as a support in future. This is called change in polarity. Something that was resistance in the past becomes a support over here. Now, when this price was falling, this was the level where we could have entered. And you could have seen the rally. Let's say if this had to fail, it would break this and you would have exited somewhere over here itself. So your risk reward is very apt at this time. If this kind of a fall happens soon after breakout, that is called retest of breakout. But this obviously happened over a period of time. It had moved up substantially. Now this is same Axis Bank. There were the multiple supports over here. So the number of time it took support and reverse, this will act as support going forward. This was a resistance line. What we saw, this acts as a support going forward. Now this is a range in which the stock was moving. When it moves out of this range, you know there's a change of trend very clearly. Now this is a dynamic trend line channel. Excite batteries, which was trading in the downside channel, you knew the trend was negative. Every time it was going close to the resistance line was a sell. Okay, unless it breaks out of that. So every time it would go closer, you can sell. Every time it was coming closer to the support line, it was a buy. If it goes below that and closes below that is when you need to change your views on it and go short. Below this, this would be a fresh breakdown that would happen, and a fresh channel or a fresh pattern would be created in that. And clearly after it breaks out over here, it hovers for a while and a fresh breakout and the trend happens, and the stock has been moving since then. We know now the prices are much higher. But until this trend was down, it was very difficult to trade in it. Now this is Axis Bank. If you see, this is from 2009 onwards. 2009, 2014, if you connect the lows and extend the line, Your 2020 fall was a support. So when 2020 fall was happening, if you open the chart and you look at it from a very broader perspective, you would have figured out where the supports were. Now, after seeing this, would anyone have concerns buying Axis Bank over here? So this is the beauty of trend lines, where you know what is close to it, what is the support, what is the resistance, and when and how you can act. You would have been uncomfortable here. You would have been uncomfortable here with the news, but here there was nothing to worry. You know that okay, if this breaks, then there's a fresh breakdown. The price is going to go down further. If you're holding it, you would want to exit. You want to go short, but this was an ideal case of reversal. Now there is something surprise for people holding Axis Bank, which I will show going forward in a couple of other slides. Now this is ITC. ITC was a joke for everyone couple of months back. ITC was trending down. Okay, it was not able to cross the resistance line, but after it broke out, it retested. We all know where ITC is today. Okay, now anyone accumulating in this range for long term, knowing the story is a different thing, but anyone expecting it to break out without actual breakout happening was stupidity. Wait for this breakout to happen, and after that, there's no looking back. Why hold on a stock for 3 years without it having a clear trend or a positive trend? The trend change after that, you know that within a year's time, we have seen a double, triple. Now, this is Axis Bank. Now, this is from 2015 onwards. We have connected the highs. This is the resistance line. This is the third time it tried to cross. It did not cross. We are back over there. Now, are we going to cross it or are we going to see a fall? This only time is going to tell. But whoever is holding Axis Bank needs to get cautious. Okay. Now, whenever there is a resistance line which is rising and the price comes closer to that, it is not a point to look out for breakouts, but it is first and foremost, it is a point for you to get cautious and exit if needed. Okay, it is very difficult to trade in the breakout of rising channels or rising trend lines. It is easy to trade a horizontal trend line or falling channel, but the risk reward, please note, is very, very bad when a stock or an index breaks out of a rising channel, and I'll give you the reasons for that end of this examples. So this is Bharti Airtel. This is a rising channel. Nothing but two parallel lines. You're moving in that. The bottom one is working as support. If the price falls from here, you can expect it to come to 640 or 700 wherever going forward. But right now it is near resistance like Axis Bank. Can anyone tell me what happens if the price breaks out of this upper resistance line? What should be your action?
So
We
we'll
should go
buy
long.
the stock. We'll buy the stock
When will you buy?
once it crosses the trend line. Then
And
we
what
should
will be
enter.
your risk reward over there? Where will be your stop loss?
The stop loss would be that candle's low.
Yeah. So now exactly. Now your point is right. So let's say this candle gives a breakout here. So that is a sign where it has broken out. So you obviously will enter on the next candle, which is a confirmation after it crosses the high of this candle. Right? Now, if let's say this is around 860, the breakout happens around 900. It moves up and closes around 920. You'll obviously buy about 920, but the low of the candle is 840. So you are talking about almost about 100-point stop loss. And your target would be same about 100-150 points. So your risk reward is never apt to trade in a rising channel breakout. Same thing if you reverse it. I'll give you certain examples. If it's a sloping, it is a downward sloping channel and it breaks out of that, your risk reward will be extremely high. It can be 1:10, 1:20 also. Okay, so breakouts of upper rising channels are actually avoidable. If you're holding on to a stock, hold it, but fresh entry into that immediately can be very, very difficult to trade. That's exactly what I'm trying to explain here. Use it to exit. Breakouts of rising channels is tough to trade. So there can also be breakout failures. Now we have confirmations of breakout, so we act on it, but we have to use stop losses. Now in this case, Nifty tried to break out. It went up in November, it failed. So we did build up positions here after it sustained, but it failed. But imagine the risk reward was so apt that the moment it didn't sustain above 18,800, we exited. Okay. Now, had this continued, what rally we saw in the last 1 week, we would have seen at that time itself. So the upside was 1,500 points even then, with a just about 150 point stop loss. So the beauty of acting on horizontal trend lines is this: your risk reward is very apt. Even if the breakout fails, you can trigger your stop losses, go short if needed. Now imagine going short from here all the way down, you would have got this fall. If someone would have bought at the money puts over here, he would have seen almost 1,500 points downside in the money positions. And he has nothing to worry about. So this is the beauty of it. This is ICICI Bank currently. Highs are connected, it broke out. This is daily, 2 days I tried to be above it, it did not, it has fallen. So likewise, you can have false breakdown also. Or false breakdown chart, you guys can draw it yourself on Nifty. Nifty couple of days back broke a support line. It didn't hold for more than 2 days, it reversed. A lot of people went short at that time. So targets and timeframes. How do you use trend lines and channels to determine the targets and timeframes? Now this is Poonawalla FinCorp. I'm just giving you 2-3 examples to explain because it's a very simple concept. Now, this is the range from which it had to break out. The bottom part of the range was around 30 or 40, and the breakout happened at around 190 odd levels. Now, this took almost close to 5 years for this entire consolidation to break out. Whatever was the range of this particular thing was our target going forward, and that's exactly where it had come and stopped last month. Whatever time frame it takes to build up that pattern, 1/3 of that is a time frame for it to achieve the target. Normally, that is the calculation. It can happen faster, it can happen a couple of days here and there, but ideally, the target price of the particular channel breakout takes 1/3 the time of the formation of that particular pattern. This is an example very similar, that is Indian Hotels. Indian Hotels had this narrow range. It took 820 days of this formation. It achieved the same depth as our target over here exactly in 1/3 the time, that is 200 days. Now, whatever was the time frame it took to achieve this, when it broke out from here, the next target was 347. It achieved in 70 days, which is again 1/3 the time frame. Now, when third time it gave a breakout, your target is 441. Ideally, it should happen in 22 days. It may take 30 days. But if the stock is trending, if the market is strong, that is normally the time frame it takes to achieve the targets after a breakout. And the calculation of your target is very, very easy when it is a horizontal pattern formation. If it is a cup, maybe it may be a inverted head and shoulder, cup and handle, whatever may be the case. The depth of it is going to tell you the target upside. 1/3 is the time frame for you to hold. If it's a 10-year horizon, what it has taken, it should achieve the target in 3 years. It can be faster as well, but let's consider 3 years, considering different kind of market scenarios. Now, couple of notes: horizontal static lines are easier to trade, very clear, because it is very easy to identify. Your risk reward are the best in horizontal time lines rather than the static ones. Trend lines can be used on every time frame. You can use it on 5, 15, 1 hour, 30 minutes, daily, weekly, monthly, whatever you want. That's your comfort. Volumes are very important at the time of breakout. If there is no volume follow-up at the time of breakout, the failure chances are very, very high of that breakout. So when a stock is breaking out of the trend line, please make sure the volume is high. If there is no volume or no follow-up volume, please avoid it. You need not get into it. You can always get into it if once it builds up a little more momentum, or just avoid it. Trade on confirmation of the breakout. If the breakout has happened, let it sustain there. If it's on a daily, let it sustain for a day or two. You don't have to jump into it on the day of breakout. Example is of Reliance. Yesterday, you would all have seen the world was jumping into Reliance with the breakout. It failed. Yesterday, had it broken out and sustained, on Monday, we could have entered above the high of that. Let it get out of the congestion zone. So confirmation after it breaks out and entering then and building up is very, very important. You don't have to act at the time of breakout then and there. Determine the target and time frame for to achieve it. It is very easy. You know how to achieve the time frame and the targets in case of channel breakouts. It is very easy. The depth of the channel is your target going forward from the point of your breakout. Club support resistance and moving averages and indicators. You want further confirmations. You want to refine your trades. You can use moving averages, Bollinger Bands. You can use your RSIs and XYZ to club it to determine further or refine your breakouts. If there's a breakout, but if you feel that the averages are deviated and you wanted to retrace before you enter, that is your comfort. You can build up and refine your trades based on that.